Joining me now on day 2 of PDAC 2023 on the Morning Drive Conference Series is Dan Wilton.
Thank you.
Handshake there, my friend.
There you go.
And you are the CEO and Director of First Mining Corp.
First Mining Gold Corp.
Yeah. Gold Corp, my apologies.
No problem.
And so the last time we did an interview with you was about 3 years ago.
Yeah.
You have a lot of stuff going on, my friend.
There's been a lot of change.
Yeah.
The good news is, I won't say the good news, the reality, tragic reality of it is that our share price is basically where it was 3 years ago too. But, in spite of everything that we've done, which, we always talk about this sort of divergence between market perception and reality, or the divergence between market capitalization and fundamental value. But what we've been able to continue to advance in those 3 years is amazing. So we're very happy with the progress that we're making.
Okay, so let's start with, we won't go back all the way to 2019, which I think is when we did our last interview. Let's talk about sort of your thoughts on 2022. Did you accomplish your goals? What setbacks were there?
Yeah.
Can we kind of start there?
Sure, yeah. So 2022, one of the big goals that we wanted to accomplish in 22 was submitting the draft environmental assessment on Springpole.
Right.
That's a 10,000-page document that's on our website if anyone wants to look through it. Very well thought out, and a lot of engineering and development work that goes into that. But that was a major milestone for us. Importantly, that you get that in the hands of all the regulators. And we've now actually received all of the comments back from all the regulators. So you go through a process now of comment response, which is they have questions, you answer those questions.
Yeah.
And, I think that process is proceeding very well. And it really is ultimately like very important steps toward us getting, the permits to ultimately build a mine and operate a mine at Springpole. So that was a major undertaking leading up to that, but real credit to Steve Lyons, our VP Environment and Community Relations, and all of Steve's team and all the consulting team that worked with us on moving that forward. So that was a major milestone. The other really fundamental change in First Mining in 2022 was us completing the acquisition of the Duparquet project in Quebec.
Right.
Which is, a 5 million-ish ounce. When you add the other projects we have in Quebec, it's now knocking on the door of 6 million ounces in the middle of the Abitibi in one of the world's great gold belts. And it's a project that we'd owned 10% of from 2016 when First Mining acquired company called Clifton Star. Mm-hmm. And Clifton had done a bunch of work on Duparquet in kind of 2008 to 2014, including 270,000 meters of drilling.
That's a lot.
That's a lot. Full-blown environmental baseline studies to understand the environment at the area. Pre-feasibility study that actually looked at about a 10,000 ton per day mine and mill scenario. Mm-hmm. So, and we got all of that in total for about $25 million, about 10 million of cash, and about 15 million in our stock. When you look at all the things that we had to buy, the ownership was complicated, so it took a lot of kind of piecing it together. But that, again, I think is a real milestone for us in terms of now having a second real world-class district scale development opportunity. So we're moving that forward now with a preliminary economic assessment that we'll hopefully have done in the summer of this year, and making good progress on really understanding the environmental baseline that's there and coming up with plans fundamentally to integrate the development of a project with the remediation of the environmental legacy that was left from when the mine operated from the 30s to the 50s. So those are, I think, you look at the big highlights, those are really the headlines. What didn't we get accomplished? I think we had to shift some of the kind of engineering and development work around the feasibility had to push some of that out just due to budget constraints. We were able to replenish the treasury by selling a bunch of royalties, the last of which we announced in 2023.
I saw that.
So that was, important for us to be able to demonstrate that all the other assets we have in the portfolio, are able to continue to fund the operation, right?
Right.
And I think that's an important distinction and an important advantage that we have versus a number of other developers who don't have, a lot of different cards in their hand. So I think that was kind of an important step for us as well. But, there's a bunch of things that we've kind of had to push off or delay just because, we probably don't need a feasibility study until we're closer to that environmental assessment approval. So it really is kind of a year of prioritizing what are the really important things that we're going to try and move forward here.
Sure. Okay, so bringing it forward now, 2023, inflation's still running hot. Gold price had a nice run up there.
Yeah.
I don't know if you want to call it a Santa rally. Personally, I think there was a lot more optimism that rates would kind of pause. The bond market was sort of telling us in 6 to 8 months, you're going to see a pause and maybe a rate decrease. Then you get all this positive job data and all this positive economic news, which is not good for the gold market because that means, that's kind of the opposite of what we're looking for at this point. We need rate stabilization to sort of let the gold price run and the US dollar come down.
Right.
I digress. I know you can talk about macros, so that's sort of where I'm at.
Yeah. No, I think you've hit the nail on the head. The one thing that I think the world hasn't really come to appreciate yet is that we're sitting in a situation where you fast forward 12 months, I don't think we are going to be able to say that we have inflation under control. So yeah, it's not 15%, but everyone is feeling it at the grocery store and at the gas pump and other places. It's been a bit volatile with respect to energy, but it's still higher than it was a couple of years ago, and it's I don't see that relenting anytime soon. So we're in a place where functionally we're flirting with recession, but yet we have positive job growth, which is strange.
And can I stop you there?
Yeah.
There is a shortage of human labor.
Yes.
So I mean it kind of does fall into the mix.
Yeah.
Then even look at the job. If you deep dive the job numbers, it's not a lot of like high paying jobs.
Yep.
So anyways, I'll let you run.
No, and I think that's right. But we're in a situation with what is slowing economic growth and persistent inflation, right?
Right.
This is a stagflation environment.
Stagflation.
The definition is stagflation, right? Exactly, yeah. So, I think it's an interesting time. I think the macro setup for gold continues to be exceptionally good.
Yes.
Exceptionally good.
And we're definitely digressing from your company, but I think the gold market, it's already shown us what it's thinking in the future. Because we had all this positive data in the last 3 weeks. That's not what we're looking for. It's cooled things off, in my opinion. But it's already shown us what it wants. Right?
I think that the push from 600 or 1600 to 1900 back up, and then everyone's a bit disappointed by this pullback because it wasn't going. I think it's just a delay.
Right.
I think it's a delay of an inevitable where, in the next 3 or 4 months, I think you're going to see the gold price properly hit where it should be if you're in a stagflationary environment, which we are. So
now we understand what's in your mind, and you've got this company that you're running. So how do you handle it? How do you manage it given how you see things?
It's interesting. So I'll take you back to the macro, but macro on a gold mining industry scale.
Okay.
For a minute.
Appreciate that.
And that is to say, the one piece that's missing in that is even in an improving gold price environment, you have gold producers that have not invested in their development pipelines pretty much for 10 years. You've had a few projects get built, many of those have struggled as they've been getting built, but you on an industry level, you have not had the kind of additions to productive capacity that you need in order to replace, reserve production. Right?
Undersupplied.
And so you really want to see the telling part of that. Like, you have to go in and look at how many gold producers actually added to their reserves in 2022. The ones that say they did, most of them raised the cutoff grade for their reserve calculation. Barrick is a perfect example of that, right? And the difference in...
Explain that. So they said that they added X, Y, and Z.
So they added reserves at these projects, but often they add reserves by using a higher gold price to calculate your reserves.
Okay.
So they had been using $1,200, they moved it to $1,300. Well, there's a lot of material in a low-grade mine particularly that's not economic at $1,200 that becomes economic at $1,300.
So they say, we're not doing it.
Yeah, they are able to kind of dial it up. They always knew it was there, but by making different assumptions, they can say we now geostatistically can say there's more gold there. So that is just to say, the bigger companies have been looking at growing and rationalizing their portfolios right now in the growing. But they haven't really been taking on new mine developments to any significant state. So here we are as a developer, with 2 5 million ounce gold projects in tier 1 jurisdictions. And one of them, Springpole now, one of the more advanced in permitting processes in Canada. There's only a few that would be ahead of us in terms of environmental assessment process. So, we've always kind of said the whole goal with this is to kind of have the projects ready to go when the industry needs them the most. And I think we're still very, very much on track for that, right? Except that now we've got 2 projects that we can be defining and scoping. Mm-hmm. And something that if you're a larger company that's looking for a development pipeline,
they can step in there.
There's not another opportunity that would have footprints in 2 world-class mining jurisdictions.
Yeah.
So I think it does kind of argue for the staying the course, where you kind of.
Can I stop you for a
second?
sec?
Yeah, sure.
The way that you come across to me is someone that feels very comfortable and confident that you have the goods, right?
Well, we do.
So
Absolutely.
it's like, okay, well, when someone wants it, here we are.
Yeah, and in a time when those have not really attracted capital or value, and it's not just us. I think you look at the development sector as a whole. It's been difficult it's been a difficult few years to be attracting capital to development stories. And that's, we go on for hours about how, the makeup of institutional investors has changed and their appetite for development risk.
We should do a webinar on that.
Yeah, it's actually a good idea. Someone who's kind of been doing this for almost 30 years.
Yeah.
Seen a few cycles. Like the one thing I'm very confident of is at $1,800 gold and above, gold producers are generating strong free cash flow. Now,
even with inflation, the way it is?
Even with inflation where it is.
Okay.
All-in sustaining costs, yes, are rising. But on an industry-wide basis, those all-in sustaining costs are probably $1,200 now. Projects that are getting developed are kind of still in the kind of $1,100 to $1,300 all-in sustaining cost.
Okay.
Springpole, by the way, in its pre-feasibility study, all-in sustaining cost in the first 9 years, sub $600 an ounce.
A lot of margin there.
There's a lot of margin.
Yeah.
A lot of margin. So, listen, the costs will have increased at Springpole too, right?
Sure.
That's why, we'd like to kind of come out with a new, an updated economic study, probably an updated pre-feasibility study, kind of by the end of this year, just to rebase those economics, get everyone on the same page. But, they are generating free cash flow at these values, and if you believe the gold price is going higher in the near term, which I think we both do, that is going to be a very important source of funding for the development sector. And those companies have not been really making strategic investments by and large. You've seen 1 or 2 here and there, But that used to be a really important part of your development capital for, companies like ours.
Right.
I think we're getting back to that. And just in some of the conversations we've had, groups who have not been looking at making those strategic investments for a long time are now actually saying, you know what, like in the next 2 or 3 years, we need to really have good visibility on pipeline here. Mm-hmm. So they're able to take some longer dated functions. But the other thing that's interesting is that all of these companies budgeted in October, November, right? When they do their year-end budgets and budgets for 2023. We'll recall what was going on in October and early November. Gold price pushed down to $1,600. A lot of these producers ran their 2023 budgets at $1,500 an ounce or $1,600 an ounce.
Yeah.
So, and it's been $1,800 or above the whole year. So there's been an extra $200 to $300, in some cases $300 or $400 of free cash flow margin.
It's not baked in.
That they weren't really counting on, even in their guidance, right? So
they got some extra money in the
budget.
budget.
They're going to have some extra money in the budget, and that's where some of that can start coming down to actually building pipelines and, building out the future of these companies and actually looking through a path to be adding to their reserves and resources. So, yeah, it's. I think it's just a matter of time until you have the industry playing an active role in starting to solve that capital funding challenge. And once they start doing it, or they start, you start seeing more acquisitions of later stage projects, then some of that capital can get recycled back into earlier stage projects. And, the great virtuous cycle continues. But the one thing I can say is that, again, having been doing this for 30 years and advised and helped, sell a bunch of companies in the 2009 to 2013 timeframe, and the last time we had a very robust gold market. These projects sell for, $100 to $200 an ounce. Right. They tend to sell at 0.5 to 0.7 times their net asset value. So, we're sitting today at First Mining with Springpole that has about $1 billion US NPV at a $1,600 gold price, $150 million increase for every $100 in the gold price. So you can see kind of the leverage that we have to the upside there.
Well, I was just going to ask you, like your company's valuation is sitting somewhere between 150 to 200 million?
Yeah, 150 Canadian today.
Okay, yeah. Canadian. So, yeah, obviously you've been hammered in the market.
Yeah.
But look at the value of those two deposits that you have.
Yeah.
So it's like,
yeah, and I think by the summer we'll have a sense from Duparquet on being able to change that from you paid $25 million for it, it must only be worth $25 million, to sort of an NPV based valuation on Duparquet, which we're pretty excited to look at. Because I think there's a multi-generational opportunity at Duparquet that a lot of people just don't understand.
So why don't we leave the interview off with you sort of explaining the company's strategy on what you want to do with these two properties this year, and maybe if you're pulling back a little bit the following year.
Sure. So certainly on Springpole, real focus for this year is to continue with this comment response that we were talking about,
right? And
to get the final environmental assessment document largely written, aiming to submit that kind of middle of 2024.
So de-risk,
fundamentally continue to de-risk. An important part of that is we've agreed to fund and support an Indigenous assessment of Springpool. So the Indigenous communities really wanted to have some ownership and control over their own assessment process. Mm-hmm. We're very happy to be supporting that. I think it's something that will, A, let the communities really focus on what's important to them, and B, give us the input on any changes that we might need to make to the project through a process that's really going to flesh that out. So we're excited to be supporting that. That's going to continue on this year. But all of that dovetailing into ultimately that submission of the draft EA, or the final EA, middle of next year. In the meantime, we would like to continue to do some exploration at Springpole.
Yeah, expand.
Well, we've got some. The last couple of years we've picked up, probably another 40,000 hectares of exploration terrain, and we're very excited about some of the regional prospectivity, in addition to some pretty interesting near mine opportunities that we're seeing at Springpole too, just to demonstrate that the 5 million ounces there is the starting point, not the end point.
Right.
So that's kind of two prongs there, and then ultimately, there's not much more work that we need to do on the engineering side to get it to a full feasibility study. So we'll have a look at that, but we're really not targeting the feasibility until the end of 24. But as I said, maybe it's an updated pre-feas this year just to kind of rebase the economics on a lot of the good thinking that's largely been driven by the environmental assessment process around tailing strategy and things like that. So that's that. And then at Duparquet, I think we'd like to get out exploring at Duparquet because again, this is a world-class gold district and a major deposit that's really barely been scratched below 500 meters.
Yeah.
And in the Abitibi, in this part of the world, the saying is the real mines start a kilometer down, right? So we'd like to test some of the depth potential, but even on some of this ground that we picked up from IAMGOLD a few weeks ago, to consolidate the land package there's some really interesting sort of drill results right along a boundary that have never really been followed up because it's right on the border between what were two historic property packages. So bringing those together, I think there's some low-hanging fruit that we can go after from an exploration standpoint. So between that, really thoroughly understanding environmental baseline at Duparquet and the PEA that we'd like to get done kind of before the end of the summer, I think we get those things done on Duparquet, and we should really be able to give people a picture of a longer-term strategy with that asset, which we're excited about.
Cash in the treasury right now?
Cash in the treasury, about 15 million, having just closed the sale of the balance of our royalties to Elemental Altus.
Yeah.
So we also have marketable securities that would be probably 12 million, maybe a bit more, and that's Treasury Metals. Just put out a great pre-feasibility study on the Goliath Gold project. That's Big Ridge Gold, who just put out an updated resource, and I think moving to a PEA at Hope Brook, which is looking great. And now some of the shares of Elemental Altus, we're delighted to become a larger shareholder there. So. And we still have the project interests at Pickle Crow and Hope Brook, which we think are worth tens of millions of dollars each. So
you've got ways that you can not dilute shareholders. Any other royalties or NSRs?
Well, one of the things that we don't have any left that we haven't sold, but we still have the opportunity to create new royalties.
Right.
We bought Duparquet, 5 million ounces in the Abitibi with no royalties on it. So I think there's a real opportunity once we've given people a bit of a picture of what that is to leverage the asset a bit with the royalty funding to, give us more of the development capital we need. And on Springpole still, I think there's still room for an expanded royalty there. So it would be really more leveraging some of the assets. But again, those on 10 million ounces, 11 million ounces of gold in Canada, those are worth something.
Yeah,
right?
Absolutely.
And just, I think when we ran our process to sell the royalties, we talked to a few people about it. But every one of those de-risking events on both of those projects, I think, helps you wrap more definition around the value of the underlying assets.
Last word.
Yeah.
Anything you want to say to current shareholders and potentially new shareholders?
Current shareholders, thank you. It's not been a straight line, and we appreciate that, but thank you for sticking with us. Prospective shareholders, I think this is an unbelievable opportunity where we are to be adding to position. I just exercised another 300,000 RSUs on Friday. So, Keith Newmeyer, our chair, continues to buy stock pretty much every quarter, and Keith's a big supporter and believer. So yeah, you've got a team that is really heavily incentivized and aligned to drive it forward, and I think this is generational opportunity to pick this up at these kind of values.
I encourage people to look at your 5-year chart. If you don't own any shares and you understand the value of what he's just explained in his own words, look at a 5-year chart.
Yeah, no, I think I get a little embarrassed by the 5-year chart because I've been here for 4 years. But I think when you look at the fundamental value we've been able to add here and continue to add, it is with a great degree of conviction that we know we're going to move this forward.
Well, I mean, I when I look at it and I understand the 2 5 million ounce deposits you have, I think, I mean, they're worth something, right?
Yeah, for sure.
And the market cap's around 150 Canadian. I can't tell anyone to buy or sell stock, but make your own decisions.
Make your own decisions. Thank you, sir. Awesome. Always a pleasure.
We'll end it here.
All right.